John, we know your answer seems to be Amazon for the next year. Is there anything different about the Amazon story right now at its price today versus where it was at 2000 versus the beginning of the year at 1200? Is it basically just more of the same and investors decide what to pay for that?
Yeah, I mean, yeah, it's our top pick again with the pullback like you called out, down 18% since peak in early September, still up 35% for the year. Just multiple levers and optionality. Our price target's $22.50 a share, so that implies 35% upside from here. And the drivers are really further e-commerce share gains in sectors like apparel, consumables, food and beverage, grocery, and B2B, and ramping margins. The margin story is really good, and that's led by AWS and their advertising business. And like you said, with the pullback, 17 times forward EV to EBITDA, that's kind of in the middle of their peak to trough for that valuation metric over the last 5 years. Another call out, I would just like to point out, we did publish a deep dive on Amazon's U.S. food and beverage, grocery, and consumables business. That sector in the U.S. is $1.2 trillion. Our call today is that they're going to go from the number 5 player with Whole Foods to number 3 in 5 years, and potentially number 2 depending on their investment. So Amazon, our top pick of the FANG going into next year.
And Colin, I mean, first of all, would you basically be behind that idea that Amazon is the way to go right here? And just in general, how is this group positioned right now in client portfolios? We know there was a massive unwind of people being so crowded in these stocks. Do you think that's worked its way through?
I think for the most part, obviously near term, there can be volatility and there's certainly some uncertainty. The government is taking a more intervention tactic. So we'll see what happens there, but certainly agree on Amazon. Essentially today you get AWS for free if you buy the stock. So I think that's very compelling. I think if we're looking at a market that continues to be a bit wobbly, Alphabet, Google probably has the most resilient business model through some turbulence, and the stock is trading at near historical valuation lows. So we'd look at Alphabet as well in that context.
Hey, John, you know, every conversation with Amazon now is about areas in which they're going vertical. We talk about delivery all the time, but today it's the Times doing this piece on making their own chips and whether or not that's a threat to Intel in the long term. How much of this gets overstated in the long run?
I mean, it's really like a focus for them. We haven't spent as much time on the chips, but like for instance, on the grocery report, like we've been covering this now for 3 or 4 years, and there's been multiple acts here. And our call today on grocery is like they could be number 2 in this massive vertical in the U.S., really driven by 3 things. If they further enable online grocery, what we found is that about 70% of Whole Foods monthly shoppers are also Prime subs. That cohort or that set of customers way over indexes in online grocery. What Amazon's been doing, even in the back half of this year, they've ramped up Whole Foods online delivery. It's now in 63 cities in the U.S., and the pickup is in 22 cities. And then the second thing we called out is consumables, which is these high replenishment categories, personal care, household goods. This is tailor-made for Amazon over the long term. And they're number 2. They're like half the share of Walmart right now. But we have them getting within shouting distance in 5 years, and they should lead this category over time. So, they definitely get in a lot of things, and so yeah. But their execution is pretty good. So, that's why it does have impacts on several different verticals.
Well, Colin, gotta say, what about Facebook? It's down 20% over the last 12 months and year to date. I mean, of course, they seem to be at kind of peak angst right now, but I don't see anybody out there truly threatening their dominance where they are dominant. Yes, there are questions about their business model, overall data privacy, but that would hit a lot of people, not just Facebook, if the rules fundamentally change. Doesn't that stock have a lot of potential?
Well, from a purely valuation perspective, Facebook looks very attractive, but I think relative to Amazon and Alphabet, there's still some fundamental unanswered questions around the pace of decline in growth and margins, as well as leadership and certainly regulatory and legal issues. So in the context of a long-term valuation framework, Facebook is very attractive. in contrast to Amazon and Alphabet, we still think there are potential speed bumps near term. So we would prefer Amazon and Alphabet at these levels.